An overview of private equity involvement in the healthcare landscape. Several private equity investment strategies exist, the most common of which include leveraged buyouts, growth capital, and venture capital. In 2020, private equity has shown an ability to absorb the impact of COVID-19. The value of global healthcare buyout deals was $66 billion from 380 deals, which is below 2019, $79 billion, but above 2018, $64 billion. Moreover, biopharma remains strong, with the number of deals reaching 150, a 65-deal increase. However, the deal values decreased to $21.4 billion compared to $40.7 billion in 2019. During the Alliance for Regenerative Medicine's annual Cell and Gene State of the Industry briefing, Janet Lambert, Chief Executive Officer, shared staggering number regarding regenerative medicine financing in 2020, $20 billion, which is twice 2019 figure, $9.8 billion, and 50% higher than 2018, $13.8 billion. In 2020, gene and gene-modified cell therapy financing increased by 73% at $17.3 billion and cell therapy by 160% at $10.6 billion. Financing coming from public market reached $9.7 billion in 2020, more precisely $3.7 billion from IPO and $6 billion from follow-ons. Private financing accounted for $10.2 billion. Leveraged buyouts and growth capital firms, due to their investment strategies and mandate, have been focusing on services providers in the cell and gene landscape, such as contract development and manufacturing organizations, CDMO. CDMOs are interesting due to their growth, value creation potential, and the financial visibility they provide to investors. The global CDMO market was valued at $63 billion in 2019 and is expected to reach $119 billion by 2025 at CAGR of 11.2%. For example, in 2019, EQT Private Equity bought a 60% stake in Aldevron, valuing the company at more than $3 billion. Aldevron, a contract development and manufacturing organization that specializes in making biologics for the pharmaceutical and biotechnology industry. In June 2021, EQT Private Equity sold Aldevron to Danaher Corporation for an enterprise value of $9.6 billion. Curia, taken private in 2017 by Carlyle and GTCR for $922 million, bought Lake Pharma and Integrity Bio in July 2021 for more than $500 million. The aim is to expand Curia's capabilities in small and large molecule research, development, and manufacturing solutions. The private financing of cell and gene therapy had three origins: partnership, private placement, and venture capital, representing $3 billion, $1.2 billion, and $5.6 billion. Global venture financings have increased in the past few years, from $1.55 billion in 2017 and $4.1 billion in 2019 to $5.6 billion in 2020. Venture capital firms had been investing in new and more mature companies as shown in the money raised in the following rounds: $2 billion in Series A, $864 million in Series B, $642 million in Series C, and $684 million in Series D and later rounds. In March 2021, Elevate Bio, a cell and gene therapy technology, raised $525 million in a Series C. The investment was led by Matrix Capital Management alongside SoftBank Vision Fund II and Fidelity Management and Research Company. Rivervest Venture Partners and Mass General Brigham led a $17.5 million series of funding into Secure DX, a gene editing diagnostics company, in August 2021. The money raised will be used for initial company development, leading to the establishment of a full-service laboratory providing off-target gene editing analysis for use in drug development, clinical trials, and ultimately patient evaluation before therapy. For Marianne de Backer, member of the Executive Committee, EVP, Global Head Strategy and Business Development at Bayer, the fact that there is so much venture capital funding going into the space bodes very well for the future. A lot of those companies are going to be harboring pieces of the puzzle of technology that are going to be relevant.